back and reran some numbers for a 30 versus a 15-year comparison, and we'll put all these up on the website. But just a average, let's just say $150,000 house. I used a 4.5% rate for a 30-year and 3.75 for a 15-year, and the interest savings or the interest difference between those two payments, assuming you don't pay a penny more at all, you pay exactly what you're supposed to pay for the full term, it's going to cost you $75,000 more in interest.
I'm just going to interject right there.
All right.
Because I don't think most people give two flips about that because they don't think they're going to be in that house 15 or 30 years.
All right, but my answer to that is when you look at the amortization chart and understanding when you're paying your mortgage, you pay the most amount of interest during
on the front end.
Exactly.
I do realize that, but I don't know. You see more, Andrew and Mike. You see, I'm at the end, so y'all have more discussion with the people than I do. But I'm just under the impression if people see that they're going to save $75,000 over the life of this loan, they're going to pay the house off. Most of them are going to say, well, I'm only going to be in this house 3 years anyways. We're going to have a family, or we're going to move up, or we're going to do this, or we're going to do that. So they're more payment conscious or whatever at that point in time. But I may be completely off base there by saying that. But I don't think most people think they're going to pay their house off. They're going to live in it for 15 or 30 years.
Depends on the people. Most people do plan on moving before, and some people buy their forever home. This is their second or third purchase.
Yep.
They're looking for the long term, and then that would be more of a factor, I think.
How would you justify that to somebody then who's looking to buy a house and say, look, you could save $75,000 if you do this or that over 30 years or 15 years? I mean, how do you counsel somebody then to choose that?
Ooh, I know.
Okay, go ahead.
Okay, make them an amortization chart post house. So let's say you have a 30-year loan, they pay it off in 15. Show them what they can do with that house note for the next 15 years since they're not paying a mortgage with it.
Bingo.
And so you, Jimmy, as a consumer, that would make a difference to you to visualize that and see that?
It wouldn't me, but like we established earlier, I'm a saver. So,
and it's a case-by-case situation.
Right.
Every client's different, and it all depends on the questions that they're asking us and what their goal is for short-term and long-term. This isn't a conversation we have with every client by any means. Mm-hmm. It is driven based on what that specific client that we're talking to at that time is wanting to accomplish.